Yo, what's going on, boys? It's Charlie here with another video, and today I'm going to be showing you guys something that I actually put into my Discord a couple days ago, and it's going to be about statistics, okay? Pure statistics of my entry model, okay? And it's going to be statistics about my entry model alone, okay? And trading it like 99% of people trade it, which 99% by definition is unprofitable, okay? Versus how I trade it, and I put concepts on top of that and how I teach it into my Discord of how it should properly be traded, okay? And I'm going to give you guys the statistics because it's going to shock a lot of people, and this isn't just my entry model. If you guys trade anything else, this is very important to do yourself, okay? Just the entry model alone, people think it's a strategy. It is not a strategy, okay? The entry model needs to be paired with actual context of the market and confluences outside of the entry model to show you which trades are actually in trend and which trades to actually, take with that entry model, okay? So what I'm about to show you guys is NQ on the 5-minute time frame, traded 4:30 a.m. to 10 a.m. Eastern Standard Time across 2 years of data, okay? And this is going to be the normal entry model and my concepts on top of the entry model, okay? The normal entry model, which is LSD, it has been, this has been taught by other people in the space, RD, Mango, Arger, a lot of these other guys. This is how they teach it, right? And it produced 124 trades across 2 years. Lots of trades, right? Whereas using it my way only produced 54 trades, cut in half, okay? And you guys are gonna see that cut in half with being more picky and using actual market context behind the trades instead of just being zoomed in on the 5-minute time frame, actually cuts the trades in half, over in half. We go from 129 trades down to 54 trades, and my win rate goes from a 42% win rate, I believe, up to a 64% win rate. And in terms of actual payouts, because you're getting consistently more wins and you're not getting out of a drawdown with the normal entry model, you actually get over 2 times the payouts in a prop firm simulator the way I trade this entry model. So I'm going to show you guys all of the data. I'm going to show you guys a quick example of the entry model and kind of how I look at things differently. Most of the actual teaching and the actual deep stuff that I teach is in my Discord. I don't put any of it on YouTube for free. It took me a very long time to learn this stuff and apply this into the markets, but I'm still going to show you guys, give you guys a free example, and I'm going to show you guys all of the data on TradeSafe. So that's what we're going to be doing. I'm going to hop right on my computer. I don't unfortunately have a face cam today. Unfortunately, mine's broken right now. So just bear with me, guys, but I am going to hop into the computer, okay? I'm going to be talking to you on there. And again, I'm going to be showing you guys the statistics. This is from a normal LSD entry model, okay? If you guys trade LSD, even if you don't trade LSD, this is important for any single strategy. A lot of people think the entry model with mechanical rules is the strategy. That's not the strategy, okay? That's the entry model. You have to pair that with actual market context, and those two go hand to hand to actually make you a strategy. You know when to take that entry model and you know when to skip on that entry model. Whereas normal people that lack market context and lack market understanding, like a lot of these people were teaching it, they would just show the entry model, the entry model, the entry model, and they can't explain to you why actually trade hits and trades lose. And they can't explain to you why price is chasing certain levels and why price is actually losing and chasing deeper levels. They can't really explain that to you, okay? So a lot of people are stuck on that 5-minute time frame. So I'm gonna hop on the computer, show you guys everything, and yeah, I'll meet you guys on there. Peace. All right, what is going on, boys? So here we are on the computer. Unfortunately, again, I don't have a face cam. I know this sucks. I usually always have a face cam sitting right here in this bottom corner. I understand, it's not the best right now, but bear with me here, okay? So this is what we got right here, guys, right? So we have statistics, okay? Now this is my back testing data, just show you guys I'm not lying. I have multiple years back tested on a lot of pairs that I trade, okay? And this is just the 5-minute, my one 5-minute Google sheet, okay? I have multiple sheets, I have multiple time frames that I have the 30-minute time frame all back tested as well. Gold back tested 5 years, NASDAQ back test. I have some data in 2016 as well. So, I have a lot of back testing data, okay? So this, I have 2 sets of actual data loaded into TradeSafe here, okay? These 2 sets, one is the normal LSD. So this is just the normal entry model. If you guys are new here, the normal entry model looks something like this, okay? It is on the 5-minute time frame, and say we have a bullish market structure, okay? Like this. We look for a sweep of liquidity, the tap into a demand zone, And if that tap is valid, right, then we take a long position and we continue with the trend. Okay, it's gonna be looking something like this. Demand zone, right? Clean reaction from that demand zone. We don't want it close inside or anything like that. And yeah, there's a couple different entry candles, which I have a YouTube video on that as well. But regardless, that's our entry model, okay? So this is what gets taught as a whole strategy right here. This is what gets taught as a strategy. And in my opinion, it's just wrong because I've traded it for over a year and I couldn't find consistency. I could hit some wins, but then I'd go on massive losing streaks and it would delete all those wins. And I couldn't really tell what trades to take and why to take certain trades because I was just getting taught this entry model, right? And that's just a pure lack of market context, okay? So this is the entry model, right? So this is this data right here. Anytime this popped up cleanly, okay, and it was, you know, most of the time in trend, right? Or just obviously, you know, not any like stupid, you know, retardedly put on positions that are just, that would make no sense to take, right? All of these are actually normal numbers because I have gathered these numbers when I traded this normal LSD. I thought these were great numbers, okay? I was bragging up these numbers a lot because I thought these were great numbers right here until I used outside context and actual market context. I narrowed it down. So I'll get into that in a second. So let's run over this data real quick, okay? So this is on the 5-minute time frame, 2 years of data, okay? This is starting technically as 100K, right? Ran this to 230K technically, right? Around 1% risk. This is targeting strict 1 to 4s, okay? And again, all your statistics are right here, guys. You have a 42% win rate, 129 trades, okay? Total P&L, again, like I just said, 130, okay? And you have all of these statistics, okay? You have a loss streak, guys, of 12 trades in a row using this, okay? And you'll see it all the time, right off the rip. 4 trades down, right? Catch some wins, and then boom, 12 trades down, okay? You know, catch some wins, and then boom, another, what is that? Gosh, like 8 trades right there. Another losing streak. So this is profitable. What happens though is you guys get caught with so many losing streaks, okay? That's the only problem, right? So you guys can pause this video, look through all these statistics if you want. TradeSafe is goated for these statistics. But again, long story short, here's the statistics, okay? Let's run over to NQ 2024 and 2025 Nova statistics, okay? So Nova is the name of my Discord and my brand that I'm building. And these are the concepts that I use paired with this entry model to help me decide, hey, take this entry model or hey, skip this entry model, okay? So long story short, it's being more picky with this entry model, okay? That's what it is. So it's eliminating all the low quality ones that people don't see because they're focused just on the entry model. They don't understand market context, and we're taking the ones that are actually high quality. So you hop over here. What do you see? Well, you see 216. Okay, well that's weird because this was 230, right? So this one is bigger than this one, right? Well, you would think with over half less trades that this number right here, aka the total balance, should be way lower than only a $14,000 difference between these two. That makes no sense, right? Well, it's because we're taking higher quality setups. So let's run over the statistics real quick. So we have a 63% win rate with us being more picky with these setups. And again, I'm gonna give you guys a market example in a second, okay? Bear with me. So we have a win rate of 63%, okay? Well, that's a big difference between 42%. That's a 21% increase. That means 21% more of the time you're gonna be winning being more picky with these concepts that I'm teaching, okay? So, and by the way, picky doesn't mean just skipping out on all the wins. It's quite literally just filtering out all the stupid trades that you should not be taking. That's literally all it is. So again, profit factor of 6.8 compared to a 2.7, okay? And yeah, again, our win rate's the biggest thing. Win rate and the amount of trades, 54 trades from 129 trades, okay? So let's just look. For example, real quick, off the rip, we took 4 L's, okay? Whereas us, we only would have taken 1 L, okay? There's one actual high quality position here, and it would have been 1 L, okay? And again, so from this point in time, this was our longest losing streak right here. It was a 4 loss streak, okay? We went on a 4 loss streak, whereas we originally, using the actual normal entry model, would have went on a 12 losing streak, okay? So win streak would have been 11, over here only would have been 6, because again, you're taking a lot more mid positions and they're losing, so you can't catch an actual winning streak. So that is some key differences as well, okay? So you guys can look at this again, pause this video, look through these statistics if you want, and yeah, you guys get the point. So what we're gonna do next is we're gonna hop over to simulate, okay? And we're gonna come over to a prop firm evaluator, okay? So what we're gonna do is we're gonna do a fixed 2-stage, pretty much an alpha capital test, okay? This is exactly what we're gonna do. So this is, for example, one of the ones I did that I've recently passed 200K in funding, right? It was a profit target of 8% on stage 1, 5% on stage 2, and again, 8% max drawdown on both stages, okay? Your daily drawdown's 5%. We're gonna run an account size of 100K, okay? Profit split's gonna be 80. So you guys see all of these numbers right in here. We're gonna come over here into the Nova one, okay? And we're gonna click simulate, and we're gonna do the exact same thing, okay? We're gonna come over to here, fixed, $500 challenge price, and again, we're gonna fill this in. 8%, 8% drawdown, 5%, 5%, 8%, 5%, 100K, 80% profit split. Okay, let's run these numbers, okay? Because remember guys, LSD, the normal LSD, using just this entry model, not using any market context behind it, technically made more, right? Because we looked at it, it was 230 compared to 216. So this should make way more in payouts, correct? Well, this is gonna shock you guys a little bit, because you have to understand how prop firms actually work and the payouts. So let's run it real quick. Well, first of all, let's look, LSD has a 94% pass rate. That means 94% of the time you're going to be passing this, which is great, right? But there's still room for failure, okay? It's not 100%. Whereas this, we run it, we have a 100% pass rate, okay? 100% pass rate. 100% of the time you're taking this, trading it like this, you're passing, okay? But there is something very interesting. Let's look at this, the expected return or the average payout amount. This is going to be your payouts, okay? Why is this number way bigger than this number? Because I thought the total amount we made right here was 230, whereas over here it was 216. Shouldn't this make more? That is not how it works, because when you're in prop firms, you can't be going on losing streaks. You can't be taking those L's, because you're gonna spend more time at break even and in lower prices with a lower win rate, which means you're gonna have lower consistency, which is gonna get you less consistent payouts. You're gonna feel like you're doing more. You're blinded by the simulation of doing more in the normal LSD because you're putting on more positions. You feel like you're doing more. You put double the positions on in 2 years than you did over here, over double. So you feel like you're doing more. You have that false perception of you're doing something right, because anytime this pops up, you're taking it, but guess what's getting drilled? First of all, your account. Second of all, your psychology, which is probably more important than your account, because guess what? When you're casually, non-stop, taking 5-6 losses in a row, that's gonna take a massive toll on your psychology, okay? And that's gonna cause you to trade irrationally. That's gonna cause you to get into a fear mindset. And that's gonna cause you to not think the smartest in the markets and then start taking lower quality positions. And then guess what? The ball keeps rolling and it keeps getting bigger. And again, your account will just get in drawdown and you blow it, okay? So it's, first of all, Nova is way stronger on the psychology side because you're not taking those losses, okay? You're not going on a 12 loss streak. The worst one you did in 2 years was 4 losses, gang. I'm pretty sure y'all guys can handle that, okay? If you can't handle that, please don't get into trading, okay? So I'm pretty sure everyone can handle a 4 loss streak. 12 losses in a row, that's, you know, now you're talking about something completely different, okay? So that's the first thing. And again, let's look at the actual payouts. This would yield more payouts because you're not taking so many losses. You're not taking a win and then getting smacked with 4 or 5 losses, and then taking 2 wins and then getting smacked with 2 or 3 losses. And then at that point in time, yeah, you can take maybe a payout, but it's gonna be really small. Whereas this consistently, yeah, it's gonna be drier, but guess what? your actual trades are going to be more active wins, and they're going to be less massive streaks of L's, which in return is going to cause you to see more consistency on your account. And when you see more consistency on your account with less a bunch of red days bringing you back to break even, you're going to take more consistent payouts. So on paper, when you actually add it, okay, yes, this would technically make 14 RR more in total with a way worse win rate, 20% less win rate, and it would make 14 RR less, okay? I'm sorry guys, this would make 14 RR more, I'm sorry. This would make 14 RR more, okay? But when you actually are using it in a real world scenario and applying this to prop firms, you're getting paid more using market context with your trades and finding more consistency. You can't make this up. So again, this is showing you guys the pure data. Okay, now I can run Monte Carlos on this, and I'm gonna make another video for that as well. But for this video, I'm just running the prop firm evaluator, okay? You guys, again, I can click on these trades. You guys can go through and click and look through all of these, okay? This is the Nova one. These are the trades with Nova concepts. Do I take losses? Yes, bro. Everyone's taking losses, okay? This is not a 100% win rate strategy by any means. There's lots of losses here. But let's go over here. Let's look at the trades, okay? Look how many more losses there is sprinkled in here compared to the other one. Look at all of these unnecessary losses. They should not be in here, okay? So this is going to yield you more payouts, okay? This is going to yield you more payouts in the actual long run. I just lost it because I clicked out of it, but you guys saw everything. It was over double the amounts of payouts you'd actually make because you're actually consistently catching more wins with a higher win rate, bro. Prop firms don't care about technically making 14 RR in the span of 2 years more. It doesn't care about that. It needs consistency, high win rate, no loss, like low loss streaks, okay? And this is where it's actually made for. This real world scenarios, not to look nice on paper, not to be like, oh, this one makes 14 RR more with a horrible win rate. This one in a real world scenario is going to yield you more results. Ask, how do I know this? I know this because I've traded normal LSD for over a year and I couldn't find consistency. I started being more picky with my setups and I started understanding how the actual algorithms and the actual market works and how we target liquidity and how we fill in imbalances within the market and what we're targeting, why we're targeting it, and why you need to understand that and then fit that into your 5-minute time frame. When I started understanding that stuff, that is when I found consistency in my trading. No one teaches that. Why? Because it's really hard to learn and it's really hard to put inside the market, and not a lot of people can do that because they just need your core cells. Okay, sorry to admit that to you, but that's what they need. Okay, so they fail to teach it on a very deep level. Can you catch wins and make it look sexy like this, right? Can you make it look really good with catching a couple wins and being like, yo, this is all you need. This is all you need, gang. You use this entry model, this is gonna find you consistency. Yes, bro, that's great for marketing, but guess what? To actually find consistency and to actually use a model that's going to work in the long run and actually yield you real results and more results, it needs to be more in depth. A lot of people know that. That's why no one is consistently profitable with this, and a lot of people hide their losses. Trust me, I know the people that teach this model, they hide their losses. So let's look over this, okay? So for example, this is a trade, okay? This right here, and this is all I'm gonna give you guys. This is gonna be the bare bone minimum explanation I can even give to you guys on the YouTube channel, okay? I go way more in depth in the Discord, okay? And what I'm about to show you here, I feel like is barely anything, but to a lot of you guys just always looking at this entry model, you're gonna be like, what the heck are you using? And that just kind of shows how inexperienced a lot of you guys are and a lot of you guys are being taught. And I don't blame you guys because I was in the same scenario. So let's look at this trade, okay? NASDAQ. Okay, this looks like a perfectly fine trade to take. Right here, this was a trade that a lot of people took. I've looked at this. I've watched people take this live and I've openly made a video calling why this is going to lose, and then I put it into my Discord, okay? So
there's a demand zone, nice level of liquidity. This is just the entry model that I just showed you guys. Price came up, took out its own high, price came down, manipulated that liquidity really strongly, right? When we manipulate that, we get a nice bullish candle close. This is valid for an entry. A lot of people took this as an entry, okay? Long position. Stop loss right under that wick. TP is gonna be up in here, right around this area. Why did this trade lose? Well, let's understand why this trade lost. First of all, let's look at the NASDAQ and ES, right? NASDAQ and ES are highly correlated pairs. When there's divergence between the two, that is a footprint from investors, okay? And that is a footprint of selling or buying pressure, right? Coming into one of the other assets. When we have a divergence, okay, we have a higher high and a higher low, whereas ES, we have a high and then a higher high, okay? So that is a divergence between the two. That is a bearish signal, okay? Watch for bearish buying pressure. What did we do? Well, guys, without going on the higher time frames, I can tell you right now, on the higher time frames, we're consolidatory. So when we're consolidatory on the higher time frames, that means price is going to move a lot more algorithmically. Okay, so on the 5-minute time frame or on the 15-minute time frame, you can drop down and understand how price is moving. Well, we just swept buy side liquidity. When we sweep buy side liquidity, we target opposite side liquidity. Okay, when we target opposite side liquidity, price comes running down. Okay, so when we're moving sideways like this, price is moving algorithmically. Again, took buy side, right? So when price is coming down like this, right, and it's rallying like this, you have to be very skeptical because, again, we're consolidatory on the higher time frames, okay? All of this is price filling in an overextension leg, okay? We fill in, let me go to the 15-minute time frame real quick for you guys. This is price filling in an overextension, right? Price is imbalanced, okay? Price move inefficiently within this leg. So price naturally has to come back up and rebalance price within this movement right here. So is that what we do? Yes, that's what we do, okay? Price comes up and fills in this massive imbalance within the market, okay? Price fills that in, okay? While doing that, we also sweep the last level of buy-side liquidity. That is a manipulative algorithmic move to take out all of the liquidity that's resting right here while simultaneously filling in an imbalance within the market, okay? When we do that, price then flips bearish, okay? And when it's doing that, what are we doing? We're seeking opposite side liquidity, okay? We're seeking opposite side liquidity. And we're seeking opposite side imbalance within the market, okay? So when you have that you have that resting down here. So what happens is internally you get messed up by a lot of the noise. Can there be trades within here? Yes, there can be, but use your confluences. Understand that, okay, market dumped, okay, what do? Well, we fill in another imbalance. Imbalance in liquidity is what moves the market, okay? So we fill in that imbalance. After we fill in that imbalance, okay, look at price, where price is right now, and understand the confluences for this trade. I showed you guys these two are diverging. That's the first thing. Okay, there's a massive divergence between the two. Okay, massive divergence. Okay, this is a bearish sign. Okay, so that alone should be throwing you off the trade. No one can teach you that because, again, they're just blinded by the 5-minute entry model. What also happens? Well, price on this leg down gets overextended, leaves imbalances within the market for price to go and fill. Do we successfully already fill those imbalances? Yes, we fill those imbalances and we're respecting them, okay? We're respecting imbalances. We just took all the buy side to the left. We're respecting higher time frame imbalances within the market, okay? There is no reason to be taking this trade. Price is seeking opposite side liquidity. That's how the algorithms work. It is seeking opposite side liquidity. We are bearish right now. So on the 5-minute time frame, you drop down and you look at this and you're like, oh, cool, this is a great trade. Look at all this liquidity. Look at this demand zone. Great reaction. That's a great trade to take. And you enter it and it loses. And what people will tell you, they'll be like, oh, well, this is just a standard loss. You know, get over it. That's trading. Move on to the next. It's not a standard loss, bro. You're getting blinded by these people teaching this 5-minute entry model, and they're teaching it as in this is everything. This is not everything. This is literally the tip of the iceberg. Coming from a person that traded this entry model for a very long time, since October of 2024, I have screenshots, I have videos. I was sitting in my room learning this strategy since October of 2024. Shout out RD, bro. I was watching his YouTube videos, literally locked in with my notebook, learning this strategy since October of 2024. Ran it the entirety of the rest of 2024, all throughout 2025, never saw any consistency with it. And then 2026, at the end of 2025, I started actually studying how the markets work, started paying for real mentors in the space, and started to learn how the actual markets work and how we algorithmically move. So then I was like, cool, these guys are teaching it wrong. Let me add my own thing into it, right? Let me add what works for me. I add it, And ever since then, I have found consistency in my trading. I've had all green months pretty much all throughout this year. February was the only month I went break even, and I didn't take any of the losses. My mentor, my old mentor, who I learned from, and other people in the space actually was negative for the month. They will not tell you that because they had their losses, but they've taken trades live. I've watched them, and it was a negative month for them. So again, this has found me consistency, and coming from a person that has traded this entry model, I am telling you guys, please don't waste time like I did, because it really sucks when you look back and you're kind of running in circles and you realize you made no real progression. You'll go through winning phases, sure, and then sooner or later you'll get smacked up with the losing phases, and it'll bring you back to break even again. I've been through it. I ran an entire year and a half on it, doing it that way. So understand how price is moving. And again, like I said, I gave you guys literally the bare basic bones I even could. Zooming out a little bit and just being like, yo, there's imbalances here. We're seeking opposite side liquidity. That's the most basic stuff I can give you guys. And that is literally why it just lost. We're seeking opposite side liquidity on higher time frames on the actual market. So on the 5-minute trend, you're looking at this and you're thinking this is a great position to take. Again, that is the bare minimum I put on YouTube here. That's pretty much it. Okay. I use a lot of other stuff. That's more goated than this in my Discord, and I teach it all in there. But yeah, that's pretty much it for this video, guys. I wanted to show you guys the actual difference between normal LSD and trading it the way I found. Again, I have multiple years back test on everything. You guys can see it right here on NASDAQ of 2025, okay? So yeah, boys, in 2025, again, had a 80% win rate, P&L of 75%. And you're being picky, bro. You're being picky with your setups. And again, I'm the one that found out that actual 1 to 4s perform better. The 1 to 3s, 1 to 2s, all of that. I've tracked all of that. Take me a very long time. But yeah, I put this all together into TradeSafe. Shout out TradeSafe. This is a goated, absolutely goated software to do all this stuff. I literally just take this and just click upload, and it runs all of this for me. It's absolutely amazing. So again, I think it's very interesting how a strategy with less trades, being more picky, having a better win rate, and it makes you more, double the amounts in actual payouts. Whereas this, you're taking over double the amounts of trades, cooking your psychology with these losing streaks, 42% win rate, and you don't make nearly half the percent of payouts that you normally would, taking trades that are actually valid and actually have a reason to win. So I hope that gives you a clear outlook on the market. Okay, I tried to talk as fast as I could, give you guys the sauce straight up. Okay, and yeah, that's pretty much it, guys. If you want to use the software as well, because this is a goated software, I will have a link in my description. It's going to give you 10% off for your first monthly trial. This software is absolutely goated. I can talk about it all day. There's a whole fundamentals tab you can use for your 30-minute time frame trades, etc. I'm not going to go into too much depth, but just in case you guys do want to run that and run the simulation on your actual back test and run the prop firm evaluator and the Monte Carlo simulator and all that stuff, do it, because this is literally a game changer. Okay, no normal person that doesn't understand how these actual prop firms and how consistency actually works for payouts would look at these two and be like, yeah, I'm fine with trading this, because it made 14 RR more technically on paper, right, in 2 years. Whereas you can actually run a simulator on TradeSafe and actually be like, yo, this actually makes it double the amounts of payouts, over double the amounts of payouts. So it's really cool to see all that stuff. And again, you can paste all of your actual specific stuff. If you guys are trading futures, paste your futures stuff into there. But yeah, that's pretty much it for this. Again, this is my normal LSD versus, let me come back over to here. Oh, I lost it. Where are we at? Versus actual Nova, okay? And yeah, you guys can see how much more choppy this is, unnecessary, where this is just a lot more smoother. And again, a calm 63% win rate, bro. Calm 63% win rate, double the amounts of payouts, half the amounts of trades, guys. I'm telling you, don't make the same mistake I can. That's all I can do, is try to help warn you guys. If you are trading this entry model, if you are familiar in the space, in the LSD space, I'm telling y'all, be careful. Okay, that's all I can say, because I wasted a whole entire year just trading this entry model and I ran in circles. Okay, so yeah, if you guys are interested in learning the actual concepts, I will put my Discord in the bio. If not, I really don't care. I'm gonna keep trading really good like I've been, but I just want to get on here and hopefully reach out to the people that was in the same position that I am, because I do feel bad, because you're running in circles right now. I did it for over a year. I wasted an entire year when I could have been actually perfecting my craft instead of just perfecting an entry model that can't get perfected anymore because it's already mechanical. Okay, it already has its mechanical rules. You can't perfect this, but you can perfect market context, your discretion, your intuition. All of that stuff you can actually perfect, and I was failing to do so because I was taught by the wrong people. So that's pretty much it for this one, boys. Hope you guys enjoyed this one. If you do, please leave a comment, subscribe. I appreciate it. If you guys do want to walk in with us again, I will leave the Discord in the bio or in the description. If you guys want to use TradeSafe, I'll leave that in the description as well. And that is it for this one, boys. So again, sorry for the no face cam, but that's gonna end off this video, guys, and I will see you guys on the next one. Peace.